Well, friends, today we will discuss on the lecture on hire purchase accounts, fifth part. Well, friends, so far we have discussed about hire purchase accounts, part 1, 2, 3 and 4. Now this is the session on hire purchase accounts, part 5th. Well, friends, as we all know that hire purchase accounts is a system where the buyer buys the products on the basis of deferred payments. So the basic difference between hire purchase system and installment payment system is that under the hire purchase system, the buyer makes some cash down payment and takes the physical possession of the products. But the buyer does not get the ownership at that very point of time. He gets the ownership only when he makes the last payment successfully. Only at that particular point of time, the ownership of the product is transferred from the seller to the buyer. But this is not the case in case of installment payment system. Under this installment payment system, the buyer buys the product after making down payment, and the remaining payment has to be made over a period of time. So when the buyer makes the payment, a part of the payment as down payment, at that point only he gets the physical possession of the good and the ownership as well. So this is the basic difference between the hire purchase system and the installment payment system. So when we talk about installment payment system, it is a system where the buyer is given the ownership as well as the possession of the goods at the time of signing the contract. The buyer has the facility to pay the price in installments. So what actually the installment payment system is all about? Let's discuss the essential features of installment payment system. As one of the essential feature of the installment payment system, I told you that under the installment payment system, when the buyer buys a product and enters into an agreement with the vendor, the buyer makes a part of the payment as down payment, and at this point of time only the buyer gets the physical possession of the goods and as well as the ownership of the product. So here the buyer has the facility to pay the price in installment. The features of the installment payment system are as follow. The first one is, it is an outright sale. So the first feature is, it is an outright sale. It means that when the buyer makes a part of the payment of that particular product, at that point of time only it is considered as a sale, a complete sales, though the payment will be made over a period of time like under hire purchase system. Then the second one is, the possession as well as the ownership is passed to the buyer on signing of the contract. Well, friends, the possession of the goods and the ownership is passed to the buyer at the time of signing of the contract. So immediately when the buyer and the vendors enters into an agreement, the ownership is transferred from the vendor to the buyer. Then the next one is the buyer can make the payment in installments. Yes, of course, like under hire purchase system, the buyer can also make the payment of the goods in installments over a period of time. Then the next one is, in case of default in payment, the seller cannot repossess the goods. As in case of hire purchase system, if the buyer makes any sort of default and if he does not make the payments of the installment, if he does not fulfill his promise, in that case the seller has every right to take the goods back. But here under the installment payment system, this is not the case. The seller doesn't have any right to take the possession of the goods in case where the payment is not made by the buyer. Then the next one is the amount paid up to the default is not forfeited. As in case of hire purchase system, the amount already paid by the buyer up to the date of default can be forfeited by the vendor. But here in this case, seller can sue the buyer for the amount due, but he cannot forfeit the amount already paid by the buyer up to the date of default. Then the next one is accounting for installment payment system. So if the product is bought under the installment payment system, then how the accounting treatment will take place? We will study the accounting treatment with the help of the journal entries and definitely with the help of the illustration also, to make it very clear to my dear learners. So first one, in the books of the buyer, how the buyer will record the transaction in his books when the goods is bought under the installment payment system. So the journal entries to be recorded in the books of the buyer are as follow. The first one is when the asset is purchased. So when the asset is purchased by the buyer from the vendor under the installment payment system, the buyer will make the first entry asset account debit, interest suspense account debit to vendor. So here the asset account has been debited with the amount of cash price of the product. Then interest suspense account will be debited with the amount of difference between cash price and installment. And then the third one is to vendor. So here the account of vendor has been credited and the account of vendor will be credited with the amount of installment price. Second one is for cash down payment. So very simple, when the buyer will make the payment, he will debit the vendor account because the vendor account is a personal account and as per the rationale of the personal account, debit the receiver. So here it is the vendor who is receiving the payment, therefore the vendor account will be debited. Then bank account has been credited. So bank account is basically again the personal account and as per the rationale of the personal account, debit the receiver and credit the giver. So here bank is making the payment on our behalf because we have deposited sufficient amount in our bank account, therefore the payment will be made through bank. So here bank is the giver, bank is making the payment, therefore as per the rationale of the personal account, we should credit the account who is giving the money. So here bank is giving the money, therefore bank account will be credited. Then for interest due, So very simple. For the buyer, interest is an expenses. So as per the rationale of the nominal account, the account of loss and account of expenses must be debited. So here interest is an expenses, therefore as per the rationale of the nominal account, debit all expenses and losses, therefore interest account has been debited. To interest suspense. So why we have credited the interest suspense account? Because interest suspense account is reflecting the total amount of interest to be paid by the buyer to the seller. So therefore we have already debited the interest suspense account by the total amount of interest. So therefore now with the period of time, over a period of time, with the making of the installment payment, the interest suspense account will be credited with the amount of actual amount of interest of that particular year. Then the third one is for the payment of installment. So very simple, the same journal entries as we have made in case of cash down payment, the same entry, vendor account debit to bank will be made. Fifth one is for depreciation at the end of the year. So again friends, as I have told you that depreciation is an expense or loss for the business, for the buyer. So therefore the depreciation account will be debited to asset. So here the value of the asset is going to be reduced. So therefore in order to reduce the value of that asset by the same amount, the asset account has been credited. For transfer of interest and depreciation to profit and loss account. So very simple, the balance of all income, expenses, losses, gains are transferred to the profit and loss account. So therefore the depreciation balance and the interest balance both are the expenses for the buyer, therefore the balance of these two accounts will be transferred to the profit and loss account, and profit and loss account will be debited to interest account to depreciation account. So by making this entry, the interest account is closed, the depreciation account is closed. Now come to the illustration. Fire Industry Limited purchased a plant on 1st January 2016 from MMC Limited. So here MMC Limited is the vendor and Fire Industry is the buyer. Under installment payment system, the cash price was rupees 20,000, payable as 6,384 as down payment, and the balance in 3 equal annual installment of rupees 5,000. So total, the 4 installments are there, these 3 installment, and the 4th one is the down payment, it means principal, and this 13845 over the installment payment, it is known as interest amount, total interest amount 1384. Now we will see that out of this total amount of interest, that is 1384, how much amount of interest is included in first installment, how much amount of interest is included in the second installment, and how much amount of interest is included in third installment. And the rate of interest is 5% per annum. So depreciation at the rate of 10% was to be charged as per written down value method. So rate of depreciation is 10%, rate of interest is 5%. Show the necessary ledger account in the books of the Fire Industries Limited. So here we have to make the ledger only in the books of the buyer, not in the books of the vendor. So let's see how the accounting treatment will take place. So in the books of Fire Industries, that is in the books of the purchaser. So the purchaser will make 2 accounts. The first one is vendor account, that is MMC Limited account. So when the asset was purchased, the plant was purchased for rupees 20,000. We can see the plant was purchased for rupees 20,000. So the entry in the books of the purchaser is plant account debit to hire vendor. So in the accounts of hire vendor, buy plant 20,000 rupees. So out of 20,000, so here 6,384 have been paid as down payment at the time of signing of the contract, that is on the very first day of the year 2016. So 6,384. So I have already told you that out of this 6,384, 5,000 is the principal and the remaining 1,384 is the total amount of interest, and this total amount of interest has been debited. So entry we had made interest suspense account debited to a vendor. So in the books of vendor it is by interest suspense 1,384. So total is the 21,384. So here at the end of the first year the first installment was paid, that is rupees 5,000. So again the journal entry was vendor account debit to bank 5,000. So this is the balance carried down, this is the balancing figure at the end of the first year, that is 31st December 2016. So total is 21,384, 21,384. So here the balance of rupees 10,000 at the end of the first year will be brought forward in the beginning of the second year. So by balance brought forward 10,000 rupees. Here to bank second installment was paid on 31st December 2017, and this is the balancing figure of 5,000 to balance carried down at the end of the second year. So total is 10,000, total is 10,000. Now this balancing figure at the end of the second year, this 5,000 will be brought forward. This by balance brought forward in the beginning of the third year, 5,000 rupees, total is 5,000. Here to bank, this is the payment of the third installment at the end of the third year, to bank 5,000. So total is 5,000, 5,000. Now plant account. So in the books of buyer, plant account will be made. The entry was plant account debit to hire vendor. So plant account debit to hire vendor, it is MNC 20,000. We will charge the depreciation. Depreciation is charged at the rate of 10%, 2,000. By balance carried down 18,000, 20,000, 20,000. So this 18,000 will be brought forward in the beginning of the second year. 18,000, again depreciation 10%, 18,000, 10% of 18,000, 1,800. By balance carried down 16,200. So 18,000, 18,000. So this is the total. So this balance carried forward will be brought forward in the beginning of the third year, to balance brought forward. Here by depreciation at the rate of 10% on 16,200, it is 1,620. By balance carried down. So this is the balancing figure at the end of the third year. So total is 16,200, 16,200. Interest suspense account. So well friends, the entry we had made interest suspense account debit to vendor. So interest suspense account debit to vendor, vendor is the MMC Limited 1384. So in this the amount of interest which is included in the first year installment is 681. So in the next slides we will discuss how this amount of 681 has arrived. By balance CD 703. So total is, it is 1384, 1384. Now this balance carried forward will be brought forward, to balance brought down 703 by interest. So this is the amount of interest which is included in the second year installment. By balance carried down 268, total is 703, 703. So this carried forward balance at the end of the second year will be brought forward, to balance brought forward in the beginning of the third year, 238. So this is it must be 238, it must be 238. So this is typographical error. So by interest 238. So this is the amount of interest which is included in the third year installment. So interest account. So very simple, interest account has been debited. Interest account debit to interest suspense 681. So being the interest expenditure, so all the balances of the income, expenditure, gains and losses, we have to transfer it to the profit and loss account. So by profit and loss 681. So again in the second year, to suspense account 461 with the amount of the interest. So this amount of interest will be transferred to the profit and loss account. Again in the third year, the amount of the interest is 238. So to interest suspense 238, by profit and loss 238. Statement, yes, this is how we have arrived the amount of interest which is included in the first year installment, second year installment and third year installment. So cash price was 20,000. So out of this 6,384 was the down payment and this is the balancing payment. So total is 20,000. So less down payment, this is 6,384. So this is 13,616 is the remaining amount. So on this we will calculate the amount of interest which is included in the first year installment, 5%. So 5% of 13,616, it comes to 618. So the total amount outstanding at the time of second year, it is 14,297. So out of this first installment 5,000. So out of 5,000, 681 is the interest and the remaining 4,319 is the principal amount. So now after subtracting the first installment of 5,000, this is 9,297. So now we will calculate the amount of interest on this outstanding amount, 9,297, 5% interest, that is 465. So total it is 9,762. So then second installment 5,000. So after subtracting, this is 4,672. This is the amount outstanding at the time of third year installment. So out of this 5,000 second year installment, 4,535 is the principal amount and this 465 is the interest amount. So that way if we will make the total of this, it will comes to 5,000, that is the second year installment. Now third year interest will be calculated on 4,762 at 5%, it comes to 238. So it comes to 5,000. So third year installment 5,000 nil. So out of this third year installment 5,000, 4,762 is the principal amount and this 238 is the interest amount. So if we will make the total of this interest and principal, it will comes to 5,000, which is third year installment. In the books of the vendor, so likewise in the books of the vendor, the transactions will be made. So in the books of the vendor will debit the purchaser account debit, to sales, to interest suspense. When he will receive the down payment, he will make the entry bank account debit to purchaser, because for the seller payment is coming in, therefore as per the rationale of the real account, anything which is coming in must be debited, and buyer account has been credited because it is the buyer who is making the payment. Therefore as per the rationale of the personal account, we must credit the account of the giver. So here buyer is the giver, therefore his account has been credited. Then for interest, again interest suspense account debit to interest, because for the vendor interest is the income and he will credit the interest and debit the interest suspense account. For receipt of amount of installment, again bank account debit to purchaser. And for transfer of interest to profit and loss account, so for buyer, for vendor, interest is the income, so therefore this income account will also be transferred to the profit and loss account, interest account debit to profit and loss. So for the vendor it is the income, therefore profit and loss account has been debited, and for the buyer interest is the expenses, therefore the reverse entry will be made, profit and loss account debit to interest for the buyer. And for the seller, because for the seller interest is the income, therefore profit and loss account has been debited, and for the buyer interest is the expenses, therefore the profit and loss account will be debited. Illustration. So we consider this problem in the same problem. So here we have made a sale of rupees 20,000. So we will make the entry buyer account debit to sales. So in the books of MC Limited, fire account to sales 20,000. So here we received the payment, down payment 6,384, and this is by bank on account of first year installment. This is the balancing figure 10,000, total is 21,384, and here the interest suspense account has been credited. The vendor will make the entry buyer account debit to interest suspense. So, in the books of buyer to interest suspense 1384. This is the total amount of interest which the buyer is supposed to make the payment to the seller. So, total is 21,384, 21,384. So, in the second year the balance has been brought down 10,000. So, by bank second year installment 5,000, by balance carried down 5,000, total is 10,000, 10,000. So, this balance will be brought forward in the beginning of the third year, to balance brought down 5,000. So, here this is the third year installment payment by bank 5,000, total is 5,000, 5,000. Interest suspense account. So, it is very simple. So, in the books of the vendor, interest suspense account will be debited and the interest account will be credited, because for the vendor interest is the income. So, all incomes are credited. Therefore, to interest 681, to balance carried down this one, total is 1384, and here the buyer account has been debited. So, the entry was fire industries account debited to interest suspense account. So, in the interest suspense account by fire industries 1384. So, total is 1384, 1384. So, this will be brought forward in the beginning of the second year. By balance brought down 703. So, here to interest second year interest 465. So, to balance carried down balancing figure 238, 703, 703. This will be again brought forward in the beginning of the third year. By balance brought forward 238. This is the amount of interest for the third year, to interest account 238. So, interest account is automatically closed. Now, interest account. So, very simple. For the vendor, interest is the income. So, therefore, it will also be transferred to the profit and loss account. The entry will be made interest account debit to profit and loss. So, in interest account to profit and loss 681 is the amount of interest for the first year. It will be transferred to the interest suspense account 681. So, here by interest suspense account, this is the amount of interest which is included in the second year installment. So, again it will be transferred to the profit and loss account. Entry will be interest account debit to profit and loss account. Then again in third year, by interest suspense 238 which is included in the third year installment. So, again the amount of interest will be transferred to the profit and loss account. So, from the interest suspense account, every year interest amount will be transferred to the profit and loss account. Like the first year, the amount of interest which was included in the total interest suspense account was 681, transferred to the profit and loss account. Second year interest 465 which was transferred to the profit and loss account. So, the amount of interest which belong to the third year is 238 out of the total interest suspense. So, again will be transferred to the profit and loss account. So, this was all about this lecture as far as the treatment of installment payment system is concerned. So, whenever any product is bought under the installment payment system, we must be very particular that how the accounting treatment will take place, how the journal entries will be made, how the transactions are recorded in the books of the buyer as well as in the books of the seller. So, with this I extend my sincere thanks to my friends, to my learners for bearing with me and enjoying this session. Thank you very much.